Folks, this isn't your father's stock market or his world. The landscape has shifted dramatically, and the stakes are higher than ever before. The old rules are gone. Every nation is scrambling to defend itself. Security is no longer just a policy. It's a race, and everyone's in it. Today is January 31st, 2026. If you haven't noticed the global tension, you're missing out on the biggest defense boom in decades. Investors and governments alike are watching the defense sector with unprecedented attention. The world is a mess. Ukraine's war drags on. The Middle East is on edge after last summer's Israel-Iran conflict, and US-China rivalry defines our era. Flashpoints are everywhere, and the consequences ripple across continents. These aren't isolated events. They're symptoms of a new multipolar world where conflict is the norm. The global order is being rewritten, and uncertainty is the only constant. The Global Peace Index tracked 59 active conflicts last year, up from 56. Europe's rearming, Asia's on alert, and budgets are only going up. Nations are preparing for the worst, and the numbers tell the story. When the threat is real, governments don't cut defense. They spend, and they spend big. Defense budgets are ballooning, and contracts are being signed at a record pace. The peace dividend is over. Strength is the new currency, and nations are investing in security like never before. Military might is now seen as essential insurance for the future. This is the biggest rearmament cycle in decades, and the companies making the tools of modern warfare are the direct winners. From drones to missile systems, innovation is accelerating. If you want to profit from the new world order, defense is where you need to be. The future belongs to those who understand that security is now the world's most valuable commodity. Let's talk about the world's biggest defense spender, the United States, a nation whose military ambitions shape global security and drive innovation. Under President Trump, defense budgets are exploding. $1.5 trillion proposed by 2027, a 50% jump over previous years, signaling a dramatic escalation in military investment. The 2026 baseline is already $839 billion, and that's just the start. This surge is setting new records for peacetime spending, with no signs of slowing down. This isn't about maintaining the status quo. It's a full-scale reinvestment in American military power, with new priorities on advanced technology, global reach, and rapid deployment. Recent U.S. actions, operations in Venezuela, seizing Russian assets, and new claims in Greenland show America is flexing its muscle and expanding its influence on multiple fronts. These moves require advanced hardware and logistics, fueling massive orders for defense contractors and pushing the industry to innovate at an unprecedented pace. For investors, this means a fire hose of cash aimed at the U.S. defense industrial base, creating opportunities for growth and long-term returns. Multi-year, multi-billion-dollar contracts provide unmatched revenue stability, ensuring steady work for years to come. National security isn't optional. These are the most reliable customers in the world, and their demand is only increasing. The U.S. is rebuilding its arsenal from the ground up, and if you want to benefit from this historic transformation, you want to own the companies making it happen. Europe's era of complacency is over. The continent, once defined by its post-war pacifism and reliance on diplomacy, is now facing a new reality. The war in Ukraine jolted the continent awake, shattering old assumptions about peace and security. NATO's 32 members didn't just reaffirm 2% of GDP on defense, they raised the bar to 5% by 2035, signaling a dramatic shift in priorities. That's a seismic policy shift. Europe is done outsourcing its security to others. Now nations are taking direct responsibility for their own defense, investing in readiness and resilience. Defense spending soared past $380 billion in 2025, and it's only going higher. Parliaments are approving record budgets, and the public mood has shifted in favor of stronger militaries. Countries like Poland, Germany, and the Nordics are leading a historic rearmament, modernizing their forces and forging new alliances within Europe. The new mantra, strategic autonomy. Europe wants to defend itself, with or without US help, and is building the capabilities to do so. Massive orders for jets, tanks, and missiles are flooding in, fueling a boom for European defense firms. Factories are running at full capacity, and new jobs are being created across the sector. For investors, this is a new frontier. Europe is now a second engine of growth. Defense stocks are surging, and capital is flowing into the industry at unprecedented rates. Rebuilding a continent's military takes decades, not years. The political will and money are locked in, ensuring this transformation is here to stay. The European defense sector is roaring back to life, reshaping the continent's future and redefining its place on the world stage. In defense, Lockheed Martin is king. Their platforms, F-35s, Blackhawks, Javelins, are the backbone of US and allied militaries. In January 2026, Lockheed inked a major deal to ramp up Patriot missile production, meeting surging global demand. Their order backlog is massive, tens of billions in guaranteed work. This isn't hype, these are signed contracts, providing unmatched stability. Lockheed's stock is a fortress, delivering steady returns while others flounder. As long as threats exist, Lockheed's tech will be in demand. Owning Lockheed is like owning a piece of national security itself. If Lockheed is the king, RTX, Raytheon, and Northrop Grumman are the brains. RTX dominates precision munitions, advanced radars, and hypersonics, exactly what modern wars demand. Their order book jumped 15% last year, driven by global demand for smarter, deadlier weapons. Every conflict, every upgrade, means more business for RTX. Northrop Grumman is building the future, the B-21 Raider stealth bomber, a multi-billion-dollar franchise. They're also leaders in space, missile defense, and autonomous systems. Northrop's competitive moat is deep. Programs like the B-21 lock in revenue for decades. Both companies are at the cutting edge, powering the next generation of warfare. In a world where information and stealth matter as much as firepower, these are the names to own. Betting on them is betting on the future of defense. Europe's defense giants are surging. BAE Systems, the UK's champion, is at the heart of Europe's rearmament. Tempest jets, submarines, warships, and armored vehicles. Their global reach and political clout make them a must-own for exposure to the European boom. Rheinmetall, Germany's powerhouse, is the biggest winner from the Ukraine war. They make Leopard tanks, armored vehicles, and, crucially, the artillery shells NATO desperately needs. Rheinmetall is running factories 24/7 to meet demand, with multi-billion-euro contracts pouring in. This isn't a temporary spike, it's a fundamental reset. Rheinmetall is now a high-growth machine at the center of Europe's defense revival. As long as Europe rebuilds its land forces, Rheinmetall will thrive. Don't overlook Boeing's defense division. While commercial planes grab headlines, Boeing Defense, Space and Security is a cash-generating powerhouse. In late 2025, they secured $12.8 billion in major U.S. contracts, work that stretches for years. Iconic platforms like the FA-18, Apache, and KC-46 tanker provide recurring revenue and global reach. Maintenance and upgrades create a long tail of stable cash flow. Defense acts as a ballast for Boeing, insulated from commercial cycles. As global threats rise, this division's value only grows. Boeing's defense business is a core reason the company remains a blue-chip holding. Let's talk numbers. The defense sector's fundamentals are rock solid. Book-to-bill ratios are well above 1.0, meaning backlogs are growing fast. These backlogs, tens or even hundreds of billions, guarantee future revenue and stability. Lockheed, RTX, Northrop, BAE, all have years of work locked in. This allows for long-term planning, investment, and rising dividends. The VanEck Defense ETF returned nearly 69% in 2025, after 43% in 2024. This is sustained outperformance. If you want broad exposure, ETFs, like ITA or PPA, let you own the whole sector. Defense spending is non-discretionary. Governments won't cut when threats are real. You get industrial stability with tech-like growth and attractive yields. The financial case for defense has never been stronger. Here's the bottom line. The world is more dangerous, and nations are spending on defense like never before. This is a secular, long-term bull market for the companies that keep nations safe. Lockheed, RTX, Northrop, BAE, Rheinmetall, Boeing. These aren't just surviving, they're thriving. Massive contracts, record backlogs, and reliable dividends make them core holdings. In a chaotic world, you want companies with locked-in revenue and government backing. Defense stocks offer growth, stability, and income, a rare combination. The trend is built on hard geopolitical reality, not hype. Don't fear the headlines, see the opportunity. Pick your stocks, buy an ETF, but make sure you have a piece of this unstoppable bull market. Booyah!